Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 7th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. For my commentary on everything from economic to geopolitical and market analysis, please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Like I said, this week is not going to give us a whole lot of economic data to trade on. Tomorrow we do have the inventory numbers for crude oil, but today we have only building permits to kind of look at here in the United States. And I usually talk about these, that you can pull as many permits as you want, and it doesn't necessarily mean you're going to build. But you can't necessarily build if you don't have the permit to do so. So with that being said, building permits was supposed to come in at negative 3.5%, came in at negative 6.6%. So not a real good sign on the outlook for building going forward. So that's the caveat with that one. It's a little bit hard to discern what's going on when you see a lot of building permits being pulled, but when you see a lot fewer building permits being pulled, it really gives you the indication that there is not the expectation for building going forward. So that's about it. Later on today we have the job, we got the jobs, the JOLTS jobs openings came in line with expectations at 5.5 million. So really nothing to see there as well. On to the overall markets. As you can see here, crude oil coming off quite a bit today, down over $1 right now as we speak. As soon as it got down below this value area high that I talked about, you're going to see the bears taking control of this. Don't know if we're necessarily going to see it get all the way down here to the $45 barrel area, but I could easily see it want to trade and migrate closer to that $50 a barrel area in the next few weeks. It's going to need to get past the support resistance area that it's at right now, right here at 51.75-ish. But if it gets below that, I could easily see it really coming down to that $50 a barrel, which is more of a psychological barrier than anything. But as you can see, there is a high volume node there, which could act as a bit of a magnet to drive trade to that price. Then on to gold. Gold yesterday, as the day went on, it just trudged higher and higher, got above that 200-day moving average I had as a target about 2 weeks ago. I thought it would come into line in the next few weeks. It happened yesterday, got above that line, settled above there. So that's an indication that the bulls are in control of the gold market. It's up another $2.70 right now, but whether or not it can stay above there is yet to be seen. And the way that this doji is kind of looking could signal a bit of a topping pattern. I don't know if it's going to be able to hold. Then on to the bonds. Bonds are bucking the trend, if you will. We have a lot of the equities up on the day, but the bonds up another 0.5 point to test that 50-day moving average. So the bulls are really trying hard to get above that because they want to get that momentum if we settle above there. If it doesn't and we start seeing it come back off again, it's just going to look like we had a bit of a dead cat bounce going on here and could see a lot more continuation to the downside for the bonds. Then on to the Dow Jones Industrial Average. It's up over 60 points right now. And of course, we're going to be talking about this quite a bit. Lifetime highs right there at 20,155. That's an intraday high, so it's not as important as in settlement. So we aren't at a settlement high at this point, but we do have an intraday high, which is a feather in the cap of the bulls, if you will. And same situation here with the Nasdaq, up over 25 points right now and creating a new intraday lifetime high. If we settled right here right now, it would be a lifetime high settlement, which would be a very nice feather in the cap of the bulls there. E-mini S&Ps are up on the day by 5 points, and starting to look like this pattern could continue to the upside, and we could see a new lifetime high in the E-mini S&Ps in the next few days. One thing I wanted to note is that we never really covered the overnight highs in the E-mini S&P yesterday and saw the market slide off towards the end of the day. But today, the bulls went in there and printed that high in the day session. So that's something that's pretty important for that type of scenario. I talk about it, that they always want to try and get that print in the day session rather than seeing it happen overnight and never coming back. It's almost just like a gap fill in a sense. Then on a couple of things that I've done, I didn't trade GM as a earnings trade. It just didn't have very high implied volatility. There wasn't a whole lot of premiums in this market, but they did come out and missed earnings by almost about 10 cents. So I decided today that I was going to put in a bearish trade on GM. So I went into the March and bought the 35 puts for $1.14. So I just added a little bit of short deltas there. I think that we could easily see GM want to come down here and come all the way back down to this value area high at least, because that's going to be really where it starts to see some support. So I think that we might see this happen within the next month or so. So playing a little bit of short end on GM. Now KORS coming back actually quite nicely right now in the last hour or so, but opened up, they beat earnings, but gapped down lower off of, for whatever reason. They did gap down. Now, I did put an earnings trade on around this one. I haven't done anything as of yet. I'm kind of playing this out. I got a couple more days, but it is against me at this point. And I put on the February weeklies and did the 37.5, 45.5 strangle in there, and I collected 85 cents for that. So right now it's down about 85 cents for that trade. So I'm kind of letting it play out. If I can get it to just tick up in the next day or two to get into that above my 37.5 puts, so they're out of the money again, that trade will have worked out. But at this point, it is a losing trade. So hoping for the bulls in KORS to try and take advantage of this, and maybe tomorrow I can turn this into a winner. I every once in a while will move that short call, that 45.5 short call that I have, down a little bit closer to at the money, collect a little bit more premium for that. So I could do that. I could roll it out in time, collect a little bit more premium for the overall strategy and try and get that to work out, or kind of let it expire and take the stock and then try and lower my overall basis on that, because I would be long the stock because I'm short the put. Somebody could put that stock to me, and then I'm just would end up doing short calls to lower my basis on that trade. So those are my scenarios that I'm looking at to be mechanical with this strategy. I prefer to just let this kind of play out and have the market come back and then settle pretty much worthless. But if I have to, I might roll this out in time, lower my short calls, create a little bit better scenario for myself, or just let somebody put that stock to me, and then I will be mechanical and lower my overall basis on that. So those are how we stay mechanical with this, increase our probability of profit. And so stay tuned. I'll be talking about that probably in the next couple of days. That's all I got for you guys today. If you can't take that, take it easy.